There is a particular saying in the trading and investing world which goes like, when in doubt, zoom out. We're going to be taking a look at the higher timeframes today, discussing exactly that. What the price action is looking like, how has it changed, what we can expect to occur next, and what will be the triggers and validations for those moves. We'll also take a look at the broader economy and the markets to discuss how this can impact Bitcoin's price performance over the next couple of days. Let's go ahead and dive into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day. The sun is out, the markets are moving. What more could a man ask for? I don't know. We're going to go ahead and talk about the price action today, discussing what has been probably the most spastic price action I have seen in a very long time for Bitcoin. The amount of manipulation going on is absurd. The amount of liquidations going on is even more absurd. But we're going to break it down and go back to that saying, which is when in doubt, zoom out. We're going to look at higher time frames, try to find some higher time frame confluence, and shed some light on what is happening on the shorter time frames and the larger time frame price action. Before we get into it, smash the like button, hit that comment button, subscribe to the channel. We have a absolutely amazing analysis coming today. I'm sure by the end of it, you're going to feel a whole lot better about what is going on. Now, you can also join us on Telegram, which is going to be our second link down below. You'll find charts, you'll find videos, you'll find updates, analysis, information, educational posts, news events, and so much more, guys. You can go ahead and contact us if you are interested in our trading channel, which is a VIP channel. We had some great shorts over the last couple of days. A 70% profit on Matic and 148% profit on Zeal. You can contact us for more information. We do daily trade signals, we do exclusive updates, and we even have our own exclusive group chat with all of our VIP members. You can find all the membership information and our trading track record in that free channel. Let's go ahead, guys, and get stuck into a video, starting off with the market data, of course, after what has been crazy times. Let's go ahead and review. Looking at the 30-day volatility, we're at 2.68%. Looking at the 60-day volatility, 2.6%. We can actually see volatility is slightly climbing still, which is obviously pretty standard. Looking at the volume, guys, we're seeing 113% increase in those 24-hour liquidations. Again, a pretty significant move upwards, but we did see a huge amount of liquidations yesterday with over 250 million in about a 40-hour period ago. Looking at the 24-hour volume, we're at 44 billion, down 22%. Again, people are starting to stop trading in this range, and as we see less and less volume come through, there's less and less liquidity, the manipulation becomes even more obvious, okay? Moving on, guys, from there, we can see, looking at the longs and shorts and the overall liquidations. I want to come back to that liquidation, sorry, right over here. We can see on that 15-minute chart, we've seen a lot of liquidations, right? We're seeing huge chop, liquidations up, liquidations down. On that 4-hour over here, we can see that huge liquidation week we had the other day, which was $204 million in long liquidations in a singular 15-minute candle. Absolutely insane. And coming back to that Bitcoin chart, you can see right over here the level of absurdity going on the price action, guys. We are seeing strong moves in either directions, low volume moves, low momentum moves. A lot of this is being driven by external factors. I'm assuming a lot of this is exchange manipulation in the price because there really isn't the liquidity and the volume to see these kind of moves, and definitely not see any confidence in these moves. Right now is probably the worst time to be trading if you are trading. Definitely stick to small time frame scalps with tight stop losses. But we're going to discuss, guys, and shed some light on the higher time frames today. But before we do that, let's go ahead and talk about broad markets. So the DXY has found support on the uptrending support line. If the market does open green, we can see a DXY pullback, and that of course will result in the financial markets rallying. If that does rally, we can expect Bitcoin to potentially rally, although the financial markets have been moving up while Bitcoin has been moving down. And again, Bitcoin moved down primarily based on two things: the falling out of that larger time frame rising wedge formation that we've been developing for a long time. Remember, we've had decreasing momentum as the price has been rising. We'll come back and talk about that, which resulted in a pretty brutal crash. And that brutal crash occurred around the same time which Silvergate, their stock price dropped 56%. Again, Silvergate was kind of like the bank of crypto, so that going under resulted in Bitcoin dropping quite a significant amount too. So we have seen a lot of turbulence and price action in the last couple of days. All the while, stocks have been moving up, right? We saw the stock market, the Dow Jones bounce on this downtrending support over here, forming what we could call a bull flag formation, which actually is a bullish continuation pattern. And we're seeing the S&P 500 reclaim that 4,000 level, not only the 4,000 level, but actually break back up into that rising wedge formation and then closing. So this week's going to be incredibly important to determine the overall direction for the market. If the DXY does open red and the markets fall down, keep going up, we could see some reversals in play. If the markets do open up red and the DXY rises, we could see that bearish continuation continue. And of course, Bitcoin will kind of latch onto that and continue with those markets, whatever direction they choose. Now, I do want to say that Bitcoin is only correlated to the stock market by a degree of 0.7, about a 70% correlation. So 30% of the time, we do see Bitcoin behaving differently to that of what we will see on the stock market. So a lot of people are saying, oh, how is Bitcoin going down, but stock's going up? Well, it's not a perfect correlation, right? So we can't always expect Bitcoin to piggyback on the stock markets and continue with them. There are times, in this instance, the Silvergate crash, we do see Bitcoin performing opposing to what the stock market is doing. Moving on from there, we can see bond yields have topped out over here at 4.89%. If we do open on the DXY green, we can expect this to continue. Again, our target is still 5%, but if we do stop out over here, we could see a pullback, resulting in the market seeing a bit of health. Okay, moving on, guys, let's get into Bitcoin. So much to talk about. We'll come back to a short time frame in maybe halfway through the video, but I do want to discuss what's happening here, because a lot of you will be very interested to hear about what is actually going on, because holy hell, guys, is this not the most brutal price action you guys have seen? A lot of you guys are new to crypto. A lot of you guys have been here for about a year. This is by far some of the craziest price action I've seen, particularly after an 8%, 6% crash. We've just seen absolute carnage in the charts, and we'll come and talk about that. Let's get to the larger time frame though. So let's go ahead and zoom out and talk about what is going on. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So first and foremost, guys, let's go to that daily chart. Bitcoin has broken out of a falling wedge pattern, right? We had a falling wedge pattern. The target for the falling wedge was the first high. So we take a measured move, right? A measured move is going to be the distance between the first low to the first high, okay? We apply that measured move to the breakout point. Now, the measured move max target is 26K, and that still stands. However, usually measured moves give you a range, not exact reversal points. Reversal points need to be identified by structure. So we can take that first high in that resistance zone and drag it directly across to this point here, which was that first or second high, on the rising wedge, indicating a point of resistance and reversal. We took shorts there, we profited there, we expected a pullback from there. We have seen that. Not only did we have horizontal confirmation, we had that structural confirmation. Not only did we have structural confirmation, we had macro technical confirmation with a rejection on the monthly from the 50 EMA plus a monthly DOWJ candle from last month, indicating that this month is going to be a reversal toward the downside, okay? DOWJ candles after huge candles signify immense weakness in the trend, indecision, and the likely reversal of that trend, and that is what we're currently seeing. We also had the 200 moving average on the weekly and the Gaussian channel rejection here. Again, the price is creating this bearish formation here, this rising wedge formation, which we're potentially broken down from, which could result in a continuation toward the downside. Again, this is what we're talking about today. So we had technical on the higher time frame, we had structural, and we had a horizontal confirmation. And now we can look at Bitcoin over here and say for a certainty that Bitcoin did reject from 25K. So where is Bitcoin going next? So there's 2 things we can do. We can look at our horizontal levels based on volume ranges, or we can apply a measured move analysis first and then do that. So let's go ahead. Where could Bitcoin go from a bearish perspective? We're taking the first bottom to the first high of this rising wedge. We apply that to the breakdown point. We can see where that takes us. It's going to be taking us into this resistance support range. So according to our structure, according to the rising wedge structure, the lowest bearish target for Bitcoin is expected to be 19.1K to 18.2K based on not only our volume range, we can see a huge amount of support over here, and that tapers off into this gap over here, which is support, okay? Meaning that as we approach this level, we're going to see a lot of volatility exit the market, compression and sideways price action and consolidation will occur up into about 18,200 range. So that is the lowest bearish point for the price action if Bitcoin does complete this measured move. However, measured moves are not guarantees, right? It doesn't say Bitcoin is 100% going to this level. It's saying if Bitcoin does continue this bearish continuation downward, and it does complete this structural formation, that is where Bitcoin could end up. However, there's a lot more to the analysis from a structural standpoint and a horizontal standpoint. For the next move toward the downside to occur, we need to lose this support range. And this is when we're going to come to the short term and talk about it. Not only do we need to lose the support range, we need to lose the prior low of that retest of the rising wedge. So a breakdown of 21,500 will confirm the bearish continuation toward 19,000, okay? That is the confirmation point. A breakdown from that point will confirm the bearish continuation downwards to 19,000, 18,200 are the measured moves targets. We do have support within this range, such as 20,500, such as 20,000 psychological, but according to the measured moves, those will be the targets. Now, it is important to note, Bitcoin has developed a downtrend, right? We've broken out of the rising wedge formation. We have developed a downtrend. So let's talk about the downtrend and the potential for a bounce upwards, and then we'll do a technical, then we'll go to a short time frame. So currently Bitcoin has developed a downtrend. You can see the downtrending trend line right over here. Sometimes it's nice to draw your trend lines with arrows, which represents not only as this a resistance, but as a downtrending resistance, right? It's nice and visual. It helps you, especially if you are new, and that is why we're doing it today. So it represents a downtrend. So we do know that Bitcoin has broken from an uptrending consolidation, a uptrending bearish consolidation with decreasing momentum, decreasing volatility, decreasing velocity, okay, and decreasing volume, which resulted in a breakdown. The breakdown has now developed 2 points of contention, which are representing our upper resistance. This is the angular trend on which our downtrend is now within, okay? So we are in what? About a 50-degree angular trend toward the downside. We are very much in a downtrend. Therefore, the downtrend will remain active until support is found strong enough to result in a break of that downtrend, where we will then retest the uptrending resistance of our prior structure, okay, where we will break into, like we saw on the S&P 500, okay, like we saw on S&P 500, or we will reject from, okay, and continue back down. So where can that support be found? That support can be found in two places. It can be found currently where we are on this short-term support level, sitting between 22,000, okay, 22,000 and 22,200, or a loss of that level, we'll be looking for support at 21,800 to 21,500. Like I said already, if we fail to hold these levels, we are confirming that move toward the downside. If we are able to bounce to these levels, we are potentially going to be contesting this downward trending resistance, which will facilitate either a rejection or a breakout and continuation back to retest these trend lines. So guys, from a structural standpoint, there is the plan. You have it laid out, you understand it, we put it nice and simple. This is what we're looking for. So your points of entry on higher timeframes are points of confluence. Look for triggers of breakdowns for shorts. Look for retests of resistances for shorts. Look for breakouts of resistances for longs, and look for take profits at these support ranges, okay, if you are short, and these resistance ranges if you are long. Keep it nice and simple, guys. There's literally no need to overcomplicate it. The price really doesn't move in complicated patterns. It does move very predictable sometimes, particularly on higher time frames. The higher the time frame you go, the more easy it is to map out and analyze where the price could potentially go, as the data is much more smooth. It's much easier. As soon as you go into a small time frame and you start scalp trading, it does become a little bit more chaotic. So let's go ahead and talk about the technical technicals on this chart, and then we'll go do the short term. So as we have seen, guys, on the daily chart, we have seen very, very clear momentum drops. We've seen the momentum falling basically now for quite some time. We'll go ahead and get rid of our VRPV. We'll bring up our market cypher B. So a couple of momentum indicators. We can see we had bearish divergences, okay? The price was rising, the momentum was falling. And this is a very common trend along stocks and crypto. Generally, when we look at trading, we are looking for discrepancies between leading indicators or what could potentially drive price and what the price is doing. If you can look at the discrepancies and find discrepancies between that, and then you can go ahead and execute trades based on that to make obvious profits. In this scenario, massive rising price or decreasing volume and decreasing momentum suggested the trend was weakening. If the trend is weakening at resistance, the probability for a breakout of resistance significantly drops, and therefore favorable shorts are taken at resistance. You have to build a narrative when doing your analysis and then trade on your narrative. Every narrative can be created. It doesn't mean your narrative is biased. If you look at the narrative formation from an objective standpoint, from a technical standpoint, you can create narratives and what is more probable without rubbing in emotions and rubbing in biases. A lot of people say, oh, Whale, you think it's going to go down, therefore you have a bias. But in reality, I don't think anything. I genuinely don't think anything. I know that sounds dumb. I look at the chart, I analyze what the data is saying, and my position, my beliefs align with what the data is suggesting to be more probable at the time. If the data is suggesting we have a more probable chance of bouncing here, I will be taking positions and formulating a narrative around that bounce. But what I also will do is I will try to disprove the current narrative to confirm the narrative. If you can disprove the narrative, it is not a solid narrative, in the sense that we can use inverted charts. If you can invert a chart and say, for example, my narrative has shifted based on the inversion of the chart, therefore your narrative is not solid and you should not be trading on it because it's likely formulated by emotion and not data, okay? So I've got on a massive tangent. I'm so sorry about that, guys. Let's get back into it. Momentum decreasing, market cypher B, MACD decreasing on the daily. We can expand that out to the 3-day chart and we can see exactly the same thing, guys. We're starting to see, like we said already, a lot of people are saying, we're at 25K, guys, we're going to the moon, we're going 30K, we're going to go up. I was saying, guys, if you're using higher time frame technicals to predict reversals, you are going to be late or wrong. And look at what has happened. Exactly the same thing. Higher time frame technicals were absurdly bullish at 25K, but they were lagging. Like we were saying, do not use higher time frames, use smaller time frames at horizontal and structural resistances to predict reversals. Technical indicators are awful at predicting reversals. They are a derivative of price action. How can you predict a reversal with a derivative of price action? You have to look at structures, okay? Technical indicators can tell you the strength of a trend and probabilities of continuations and how the trend is moving in terms of strength, but it can't predict reversals. So do not make that mistake going forward. Do not use technicals as your sole indicator for entries or exits. Use structures and technicals to validate, okay? So looking at the 3-day, similar thing, guys. We do have momentum falling here where bearish divergence will pop up. We are seeing the MACD cross over to that weakening positive momentum, and even on higher time frames now, weekly, we see similar things pop up, right? We're seeing momentum start to curve over. We still do have positive momentum on the higher time frames, but that momentum is starting to dwindle. And I do want to point out, guys, we delete everything on the chart. We do have a double top formation here at 25K, but more importantly, guys, I do want to go ahead and say this one last thing before we do the short term. We do have on the smaller time frame our 50 EMA converging upwards, right? Looking at the 50 EMA, we can see we have retested the 50 EMA and dropped below the 50 EMA. This will be the trigger for a reversal in price. So technically right now, not only do we have the structural confirmation of a downtrend, we actually have a technical confirmation of downtrend too. There is no doubt in my mind we are currently in a downtrend. The question is, will this facilitate a bounce? Will we see something like we saw in the stock market where we had this downtrend and a push upwards, or is this downtrend going to facilitate into a extended continuation downwards? And like we said before, to answer that, you have to look at those structural levels we talked about in the start of the video. We answered at the start of the video. Let's get to the short term and then we'll end off the video. Crazy price action, crazy volatility, absolutely absurd. You're being an idiot to trade this too much. Like myself, I'm an idiot. I traded this all this morning. I made about 6 grand on it, which is great to see. But in general, guys, if you're not an experienced trader, do not touch this chop, okay? This chop is purposely driven to liquidate your positions, okay? There is very, very low volume, very low liquidity in the market. The market makers are quite literally manipulating the price to stop out and hunt your orders. Do not be a fool and trade this time. Unfortunately, a lot of traders are emotional. When they see volatility, that is when they trade the most. People trade the most when they shouldn't trade at all, and they don't trade at all when they should be trading the most, okay? That is because a lot of our decisions as traders are based around emotion if you cannot control your emotions. So generally, your gut will tell you what is right or wrong. If you think you shouldn't be trading because the price action is crazy, you probably shouldn't be trading. Your objective as a trader is not to take every single trade. You don't have to jump on every single move. You don't have to jump on every single drop. Your objective as a trader is to look for the best possible scenarios for the least risk possible that aligns with your structural and technical narrative, okay? Take those trades and execute those trades properly. If it's a win, it's a win. If it's a loss, it's a loss. But your job as a trader is not to jump on every single pump you see and every single dump you see. You do not have to be doing that. That is only going to result in emotional trading and chase trading or revenge trading, which will get you absolutely wrecked. So short-term price action is a mess. I'm not even going to go ahead and try do a technical or structural analysis on this. Like I said, when in doubt, zoom out. We've done our zoom out. We've looked at it, but I will go ahead and say we have developed some degree, okay, some degree of uptrending support here. That is a confluence of about 22,000. Go ahead and draw 22,000 in. 22,200 over here. But you can see that our VRPV does suggest, if we zoom out, under 22,200, we will see a small, I'm going to zoom out a little bit more. We see a little bit of a drop down in the VRPV over here under 22,200. Again, it's not really loading in for some reason, but there is a drop down under 22,200. Again, indicating, there we are. We can see it indicating a little bit of a drop towards 22,000, and then 22,000 is really when we see that gap down to about 21,900 to 21,500 level, right? So we are looking for a drop below 22,000 for a trigger of those shorts. But again, it really isn't the price action I'd be trading. I'd be really waiting for confluence and waiting for the market to make a decision at those supports and look for potential reversals at those supports. So for example, guys, like I said, we're looking for support here for longs. We're looking at shorts if we break down, and then we're looking for longs if we break up, and looking for shorts at those resistance levels over here and here. There's no need to try front run this price action due to the volatility and due to the craziness. Look at it right now, guys. Look at that. If you bought this breakdown, if you're thinking a breakdown, you've already been liquidated if you're on high leverage. So there's no point trading this. Keep your wits about you. Do not feel rushed and pressured to trade every single move. It is really not necessary, guys. You'll only end up getting emotional and getting stopped out of your trades. Looking at the price action here, we are developing some sort of rising wedge a rising channel formation, which of course is a bearish structure. If we take a measured move from that and apply that to a hypothetical breakdown point, you will see that takes us down to 21,800, which of course is going to be that zone which we expect the price action to come down to anyway. So I'm going to go ahead and leave the video there. I hope you enjoyed. If you've got any questions, leave them down below. Of course, we do daily videos like this, so go ahead and smash the subscribe button if you made it this far. Thanks for watching, and I'll see you guys tomorrow. And be sure to check out the Crypto Academy. If you want to learn how to trade, guys, not only learn how to trade, but learn how to do structural analysis, technical analysis, learn how to control your emotions, learn how to apply risk management. This is a course for you. I've developed it from the ground up, taking many, many years of experience and kind of putting it into a compact package and what I believe is the most essential tools and knowledge to get you kick-started in TA. Again, it's not everything, but it's everything you need. So go ahead and contact us, cryptoacademycourses@gmail.com. We'll send you some information and get you started. That being said, I'll see you guys tomorrow. Cheers.